time, we finish on time. What do you think?
Yeah.
All right. Well, welcome to Industry Update. I see some serious powerhouse leaders in the house. What's up, Mark? Manny? I don't have my entire screen open, so if I missed you, wave your hand. Turn on your video if you want to be seen. Welcome to Industry Update. I believe Allie and I are going to be hosting the show today.
Yep.
Happy to have any leader in the house or anyone share. That's the cool thing about it. We're a very collaborative organization, and we believe that everyone can win together. So happy to be here. Happy to host this conversation. Let's see here. The only thing I don't see are there's the cab stats.
I yeah. I have
I can,
everything as well,
okay. Well, let's
except
see.
for it's loading back up on the computer that I kicked off.
Yeah, let's see what happens here. Let me try to share mine real quick and it should work out. And maybe. There we go. All right. So I believe I started with, I think I've
Nice.
got DeKalb
I can
County
see it.
teed up. And these numbers are always interesting to me in that, I don't think any one partial month in the way that our reporting works really tells an entire story. But as you start to scan, and these, by the way, are all available on our therealestatestats.com. So these are great tools and resources for trending information. And, although there's an article today, in fact, that's going to point to October being a better month than we've had of late. A lot of the numbers kind of have been very consistent, which consumers like consistency. And I think if you're going to win at any game, consistency makes it a little easier because if what you're doing is working, keep doing it or elevate it. If it's not, the information's not changing. The market hasn't shifted significantly. So it's probably an operator opportunity to improve your game. Allie, do you want to, I mean, you've got 477 active pendings 184, and I kind of immediately pan down. When I look at this, I look at actives. Under contracts are great, but pretty low number relative to, and pendings are kind of clearly important. Those are hopeful closings. Expireds and closed are that's where the rubber meets the road, and that's evidence and proof that things, where the economy sits in per county. Anything
hmm
you'd add to the numbers that you see and any trends or trajectory or how your narrative is being employed?
Anything I would add actually is highlighted when we go through each of the articles. It goes over all the trends, so I don't want to give the spoilers to that,
Fair enough.
you know.
Fair enough. The cool thing about this show too and our podcast is it's unscripted. We just bring the data and then we have an organic conversation. What I
Hey,
see is that obviously closings look strong, but it's the end of the month, and that's a common trend because of the, week to week reporting cycles. The real truth will show up in the next week cycle because we'll have eclipsed the end of the month. We had Thanksgiving, so that might push closings front or back of that. So maybe that's why the bump was significant. Uh,
Rick, looking at those pending numbers, that's pretty high. If you look back in the past couple of weeks,
yep,
that's a big bump in pendings.
you're exactly right. I mean, that's 20% even, right? 30
Hmm.
than
Oh,
last
it's
week.
huge.
So, again, I guess the raw number sometimes you go, oh, it's just 20 or 25, but relative to the collective, that is a good bump. And one
Hmm.
of the articles, kind of like Allie, I don't want to spoil it either, was, that
Yeah.
we October was, NAR cited as the best over October in a few years. So, yeah, that's inspiring data. And then the question always comes back to, are you getting your unfair share of what's available? And again, that's where rubber meets the road. Let's go. Let's see here. We'll look at Fulton real quick. Hopefully this thing transitions reasonably quickly. There
No,
we
it's
go.
going.
Yeah, hold on. It's loading. There we go. It's here. Let me just pan to the right. Oh, I have like 17 tabs so that I have all these articles available that may or may not have an effect on. Let me go up so I can see what I'm looking at. All right, it's jumping all over the place. That's not helping me do this. I'm in 22. What do you guys think? Anybody want to go back? I did, thinking through this today too, it would be helpful, I think, on to some degree, if you're a fan of stats, to go back and do, month over month and year over year, and take a bigger macro view. We tend to focus on micro data here. And so, all right, I'm there. Can you see that?
Yep.
So 847 active, under contract 115, 27 coming, pending 249. So that again illustrates some
Huge jump.
consistency.
Mhm.
It's still not I mean, if you go back 3, 4 weeks, 8 weeks, it's right in line. And again, you're looking for trends and trajectory to get out in front of anything coming at us. Closed, that's a good number, but very consistent in my opinion. Anything either anybody would add?
What we're talking about, hope 2025, right? Get yourself ready.
That's it. Well, if and again, there's some articles we're going to speak to about trends and potential, prognosticators between Mortgage Brokers Association and Fannie Mae. Everyone has an opinion, but I don't think anyone said we're going to light the world on fire in 25. Like it's looks like there's some consistency that's going to continue to play out. That's rate driven and supply driven. And again, that's our conversation. We've got a pretty big contingency in Cobb County, so we'll throw that up, and I think we'll leave the data where it is. If this isn't, I don't think there's anything significant again that's mind-blowingly different. See how fast I can get here. Brett's really good at this. I'm in training. 24. Here we go. It's going with me for a change. That's helpful. And can everybody see that? Middle of your screen?
Yes.
Okay, great. All right. Actives 454, under contracts 85, coming soon's 11. Not that I don't pay much attention. 146 pending. Withdrawals and expireds, man. When if I'm asked what are the catalysts for a market that's not going to improve, it's going to show up in the withdrawals and expireds category first. And we're holding our own. What does make markets seems to sell, and that's again the economics of supply and demand. Closed numbers pretty solid relative to last week, but again, I don't know if people were pushing in pre-Thanksgiving, um, but
There was a
definitely,
holiday week the week before as well.
yeah. So there you go. Anything anyone would add? It kind of the good news is there's opportunity everywhere. That's what I see in the data. All right, well, let's move on to. Let me turn on the other articles. Can you see that?
Yep.
Yes.
Awesome. So Atlanta home sales rise in October, countering market seasonality trends. Um, this just basically, it's a really short article. It was in the Atlanta Business Chronicle, but it just cites that, in October, Metro Atlanta had in 23, 5,800 sales, and October, just past October this year, 6,200. So 400, that's a pretty good bump, and we haven't seen that in a couple of years. Um, they did claim a couple of the catalysts they claimed was the election was nearing the end, but I don't know that I wouldn't argue that if October sales were probably, booked in August and September, I don't know that the ending of the election cycle necessarily drove it. Rates did dip the end of September, as I recall. Maybe that was a motivator. There was some reason, maybe that,
Yeah, they had cited that as well.
yeah.
I would see the
So
end of the presidential election more so holding up for November and end of November and December rather than talking about October.
without a doubt, and
The
as they
election people, yeah, they're gonna wait. If they're waiting that long, they're not gonna be like, okay, we're gonna close right before the end of the election. If anything, those folks may wait until afterwards.
I think you're spot on. Mark, Manny, anything to add?
Yeah, I mean, I think what we're seeing in October was rates had been gradually decreasing prior to the election, and prior to that November rate cut. So I think what we're seeing is the result of people getting off the fence because they saw the rates inching down.
Yep. Excellent. Excellent point. And wisely so, because they've inched back up, right?
Yes,
So if
they
you
have.
made your move then, that's brilliant. But, real estate again, you don't really time the market in real estate especially as an owner occupant. I mean, the idea is you buy the house and you date the rate and find the right house, and you're far better than fearing a quarter point or a half a point differential in rate. This article in Inman projected downward revisions for 2025. I thought that was interesting. Um,
Yeah, this
2020,
article bummed me out a little bit.
say it again.
I said this article bummed me out a little bit. I'm like, oh,
Yeah, I mean, I don't think this guy wakes up optimistic ever, right?
look at his face.
So, and the mortgage bank, everyone has an opinion. I think one thing that I read in this article is they changed their mind like from a month ago.
Hmm.
So if you could change your mind that quick, I wonder what the catalyst was for that revised opinion. Um,
Right.
so with a grain of salt, and I think the important thing is, the reason we do this is that as advocates for your clients, the more you're abreast of, the content of information flowing into the head and heart of your client, the better you are to serve them. And if you can get out in front of it and either counterbalance it or validate it in a narrative that works for your client, that's serving them at the highest level. And so again, this is just information. How you deal with it and what you deal, the consistency in the data that we showed earlier would point to, okay, so what, now what? And there's no doom and gloom. It's just, they've changed their opinion of where rates are going, essentially, I think, is the driver, supported also by a lack of inventory from the existing home side. And they also cite that, although builder business is up, it's really catching up, not getting out in front of our crisis for, available homes to buy and sell and put people in. Um,
Jane,
2024 does look like it's going to wrap up to be the worst year since 1995. And I found that interesting. And, for those of us that have been around a minute and we're doing business in 10, 9, 10, 11, and even into 12, 8, 2008, it's the quality of the volume. They're talking just raw numbers. I think because average sales price dropped so significantly and there was so much REO and foreclosure on the market, the unit numbers in 2008, 9, 10, 11 doesn't reflect in that data point. Like 95 is the worst year. I would argue that those were far worse relative to profitability and capacity to make money in real estate.
Well, and
Anyone want to add some context?
actually, Jane has her hand up.
yep.
I was reading
All
an
right.
article in Yahoo Finance about perhaps Trump returning Fannie Mae and Freddie Mac to private control. What effect would that have on the market? What are your thoughts on that?
That's what I was going to add. This entire article, which I found pretty funny. First of all, they did the flip-flop, right? From last month. And then they were saying, okay, latest forecast is rates remain closer to 7%, and then they'll remain above 6% for 25 and 26. They go through all of this, and at the bottom of the article, they say this does not take into any account of any type of policy change whatsoever. So they're just basing it on projections of the past, and they're not taking into account any type of change structurally or policy wise moving forward. So I thought that was interesting because,
And
new we're looking at some change probably.
And,
Mhm.
and nobody really knows the answer to your question, Jane, what effect it would have. I think that would be foolish to try to over speculate. And to be honest, I can't imagine the changeover and the amount of time and effort it would take to reinvent it in that way. I mean, policy is one thing and guidance is another, but actual ownership of the outcome. It would be interesting to see, but I don't think it's going to happen fast or soon or have an immediate impact, regardless of what happens.
I
Yeah,
Um,
think
they say it wouldn't happen till 2025,
well,
if
even that.
assumed, if it happens, right?
If it happens. So here's what they also said. They predicted, a month ago, they were saying that by the end of next year, we might see 5.5, 5.6 interest rates. And now they're saying it could creep up to 7. Honestly, if 1 point changes your entire business, you've it's that's I think what I do like is that we've sort of hovered in that 6 to 7, 7 and change range. And if you've learned to operate there, consumers do like consistency and predictability. So I don't think it's going to crush us. I just don't know that it's going to spark a mass movement for sellers to sell just because of rate-driven opportunities. And if there's not something exciting to move to, it's not just rate, it's there's no excitement around migration yet. Does that make sense? Like either retiring, empty nesting, smaller, more, that whole downsize concept where it's really right sizing to where you want to be because the next season of your life is maybe serviced in a higher level, being in a different environment, a different town, a different micro market. Those are the key indicators of, I think, are triggers. Mortgage bankers, by the way, predict 6.3 by the end of next year. So it's basically consistency. And
Mhm.
so that back to the point, man, if moving now makes sense to your client, don't let rate be the driver. Anything anyone else would add?
yeah,
Yeah, I
Rick,
mean,
I wouldn't. Oh, no, go
go ahead,
ahead.
Danny.
I was just gonna say, I think Allie's comment earlier is important because I think that's how people see some of these articles, right? What I love about some of these that sound a little negative or have very, interesting voices to them is this is what the snippets and the clips become on social media. It's what becomes, the headline that they read. So we have to know the detail behind it. And even in an article like this, even though it starts with a very kind of interesting voice and it can be a little scary, it still is saying that although the market has, short-term pressures to it, the broader economic fundamentals are going to be solid. And as long as we are continuing forward and we can provide the info and the stats and the facts, which is what we do on this call, we're going to be okay explaining this to our clients. And like Rick said, that 1% won't matter because we have to hone in on those that need to move, right? And those that just need the explanation to make it happen and make it worth it.
Yeah, I mean, sometimes you just have to validate what their heart says do with with the intellectual side of this conversation. And the
Yeah.
next one really, I think, speaks to that.
Oh,
And
Ken has his hand raised.
Yeah, I mean, just a little note. I mean, the reality from my business, I mean, being on the front line, I'm starting to see that a significant amount of buyers jumping into the market. I mean, buyers are tired of waiting. It's after the paralysis of the election, and people are tired and they're jumping in. So I see this as a very good sign in preparation for the upcoming year, right? So normally we see this uptick, and after January, I mean, like the beginning of January is when it starts and the phones start ringing, but in my business, that's already happening. Like my buyer population is up like 50%. And
nice.
this all started in like after the elections in November. So I think I don't think that's coincidence. So,
Beautiful. Thanks for the ad.
yeah.
So this article speaks to NAR signals the worst of the downturn may be over for existing home sales. Again, there's a million opinions. Um, October obviously had the first increase in 3 years, month over month, in existing home sales. The interesting thing here is if the number one thing you're battling with your clients, my speculative guess is helping them mitigate fear of a mistake, fear of a misstep, fear of a bad timed move. And I don't think any of this speaks to that, especially when you overlay the existing home values and how they've appreciated in light of everything that's happened. And that valuation, your biggest fear isn't rate because you can always, amend your rate when rates come down again. But if we saw a mass, drop in valuation, that's where people get hurt in real estate, and we've just not seen it. And I don't think that there's anything in the near term that speaks to that occurrence. Anything you'd add from this article?
Yeah, at the bottom of the article, they highlight how VA buyers are at an advantage right now. And they may see that continue on through 25 and 26 because they can have a lower down payment, lower credit scores, lower mortgage rates, similar to those who are using a conforming loan. So it is a time to shine for the VA buyers out there.
There you go. There's
Mhm.
opportunity on every corner. You just have to find it, present it, and promote it. Um, This article is there's how to answer buyer seller questions. This one might be one of the better articles in terms of the context of the discussion. And anyone fearing that, back to my experience in 2008, 9, 10, 11, when I sold a ridiculous amount of foreclosures, and my average sales price, by the way, on my foreclosure inventory was like 130. Anyone want to go back and build a
Hmm.
portfolio around that season? So, again, there are no bad markets or good markets. There's just markets and there's opportunities inside of each market. But one of the things that, again, if you're trying to mitigate fear, this is a tremendous graph for just affirming that real estate is probably a safe haven and a good place to be, at least have a piece of your portfolio. And there's 48 million in value currently. There's 13 million, excuse me, trillion. This is trillion. This is a national number in debt, leaving us with 35 trillion in equity. And so when you look at this, what triggered 2008, 9, 10, 11 was a disproportionate amount of debt to equity or value. And when people operate in fear and start handing the keys back to the bank, then you trigger a downfall and you trigger competition that's not advantageous to homeowners, if that makes sense. So um, I think this graph really speaks well to there's a lot of equity. There's not going to be a flood of inventory anytime soon. I think it's just going to be a trickle effect and a slow build and a slow improvement over time because there's too many people sitting on equity. So there's no reason, unless they choose to move, that inventory would be significantly affected outside of new construction, which we've seen is still lagging. Um,
Except for in your outlier markets, they said like Miami or Austin.
They did, and they've had a tremendous uprun too. You look at the amount of appreciation those cities have had, it's disproportionate to the rest of the universe, and you can't take, and not give back. And
Yeah.
I don't think Atlanta, in fact, I know Atlanta's not had that experience. We've had appreciation, but it's been consistent, and I think moderate would be the right word. So here are the questions to answer by yourselves. Are rates coming down? How would you answer that panel of experts?
Yes, and they're going up. Rates are going to continue to go up and go down, but they're not projected to change significantly over the next year. So the question becomes, what is your motivation for buying and selling right now?
Anything you'd add? That's awesome, Mark. And I agree. It's really your story that matters inside of a global story that may or may not happen.
We talk about that why. You have got to get down to the why of your clients. It is going to be what makes or breaks you because you've got to have a relationship. That's what we're getting paid for now. It is the professional, right? We talked about the year of the professional. Hopefully, we got all that out of 2024, learned how to have these conversations. We've done all of the scripting and hopefully are ready for 2025 because these are harder conversations and we have to prove our value. And this is what does that, right? Being able to have knowledge and explain what's going on out there.
Well, here's my advice too. Instead of just telling them, yes, they will or no, they won't, which we're all guessing anyway at the end of the day, and the fact that we've got multiple sources that are very credible with two different stories, I think it comes down to showing people what the impact of a half a point or a quarter point, when you also factor in the possibility of appreciation and also the mortgage interest deduction. Ultimately, it's is that a lifestyle decision and an opportunity to live your best life decision? I mean, that's kind of that owner occupied question. Should you sit and wait or not? And I've said it many times. I think the best time to buy and own real estate is now and any time in the past. There's not a piece of real estate I've ever owned, and I've owned way more than I wish I owned it all right now. I wish I hadn't sold any of it. And so I don't think many people would argue that point. The next question is, are prices going to come down? Who wants to share?
So they had said that essentially just the inventory problem's not going to solve itself within the next 12 months. Unless you're in one of those outlier markets, the prices will have a healthy appreciation upwards. So again, it goes back to the stability and the predictability of the market.
Yeah. It's
Consumers
supply
are
and demand driven, right? I mean, that's the core tenet for all things, value is supply and demand. Unless demand skyrockets, all of a sudden, all of these folks that are living with their parents who are in their 20s or 30 decide to go out and we reinvent a first-time home buyer program that's addictive and catches fire. The buy side is probably going to stay consistent, and the sell side doesn't look like it's going to just bloom or explode because there's not inventory coming fast enough. So I don't predict prices are going to come down. Anyone argue that point? How much will they appreciate? That's part of the speculative side of owning any investment. But the good news is, I don't think there should be no ounce of fear that that's an element, in my humble opinion, in the near term.
Ken.
I think I think we're on the verge, right? I mean, it could go south. I mean, it's all based on supply and demand. And if I see if other agents are experiencing the same thing I am, then the buyer demand will start catching up to the supply, right? And which is a good thing, and that'll help insulate us from, kind of going downwards. But if that stays the same, I think we're on the edge of going down because there are some pockets that have declined. I mean, it's really hypersensitive.
Yep. Agreed.
I think what's interesting, Rick, is we have to, for the mindset part of what we're about to get into with 2025, one of the things I'm talking about is we have to be aware of who our enemies in our storytelling are, right? We can sit here and do facts all we want, but again, the media wants this crazy article and these crazy facts and these crazy headlines. And I think this article is perfect because really we can talk to an optimistic outlook, right? There's a bunch of factors that are outlined in this article, in fact, that tell us that there is a balanced market that's coming in the year ahead. There's a bunch of opportunities for both buyers and sellers. And again, stick with your realtor because we're going to keep up with what's going on to figure out what's going to work best for you in your move or your investments. And it's just a balanced market, but it's not sexy. It's not exciting because it doesn't create panic, right? And that's what we have to fight against. We have to keep that very balanced momentum in front of our clients.
You make an incredible point. You also raised the thought that with an ounce of uncertainty creates a pound of opportunity for the agent because now, as an advocate, we're more important than ever to discern an okay deal, a bad deal, a really good deal, and a run, don't walk deal. And so if you really know your micro market and you understand the dynamics of opportunity and what's coming and evolving, you become invaluable.
I'm glad we recorded these calls because I'm going to write that down exactly how you said it because you laid it out perfectly.
Well,
100%.
good. Don't ask me to repeat it exactly that way either. But I think everyone gets the point. Like if we lived in a perfect certain world, that would be Amazon. You know, I was noticing that Brett Caldwell's hair gel looked better than mine. This is a true story. And I'm like, hey Brett, where do you get your gel, man? That's way cooler. You got this thing going that I can't get going. And he sends me a link 2 seconds later. There's no gray area in judgment. Like that's what it is. That's what it does. Everyone knows it. Real estate's just not that way. There's so many nuances that make you an invaluable team member and a leader of the team, to be honest, and an advocate for opportunity. So make sure you're taking advantage of that by honing your skill and also expressing it, knowing it's one thing and others that the world knows it. So ask yourself, how am I promoting my gifts? And is it obvious that I'm the unequivocal best choice among a perceived group, real estate agents? Are considered, somewhat commoditized to some degree. We're all licensed to do the same thing, but we're not all capable of impacting people the same way. And what's that differentiation look like in your world? And as I say that, if you're listening today, you should pull out a white sheet of paper and go, what's going to be different next year? What's going to separate me from competition? What's going to elevate my experience with my clients and make me the undeniable choice? And if you can define it, then you can chase it. So affordability is a two-part question. That was the next question. Will affordability improve in 2025? The job stats are good. Inflation's been managed to some degree, it looks like. I think we're in good shape there. Does that mean there's a reset on the cost of living? I don't think so. I think, after post-COVID, everyone sort of adjusted their pricing accordingly. And that supply chain narrative hasn't, even though it's evolved and changed, I don't think pricing was ever bounced back down now that we have access to things. And so that's a variable that's just ongoing. The bigger question, I suppose, is interest rate, and we've kind of touched on that. And then the second half of it just talks about the challenge for first-time home buyers to function with, it's a function of three factors. It's pricing, which we've already discussed. We don't feel like there's no major price improvement. It may mean living in a different market area or slightly outside of your target zone to get the best house for your affordability rate. Interest rate, and lastly, wages. How much are people making? And I I don't know that I'm an expert on wage improvement, but I think there's more consistency in that area too. And there's not a massive, I think, horizon for improvement or devaluation of wages. Anybody have anything to add? And I do think there are a lot of people that could buy that aren't buying because they're just hedging their bets, waiting to see. And that's where one-on-one conversations have to occur if you want to tip the scales of your success. You have to inspire and motivate the concept of not waiting necessarily being the best answer.
And lead generating, at the end of the day, lead generating is going to fix all of your problems, getting out there and having conversations about real estate. With the extremely motivated, these questions aren't going to even come up because they don't have a choice. So just more conversations.
Yeah. And then down payment is resources. So this goes back to, I said this last week on the call, maybe the conversation, although you want to target the actual end user, your buyer, your future home buyers, but it could be that a parent is the trigger or the tipping point to their decision making, where you compel the parents in your database to rethink helping their children establish credit and credibility and plant roots. And so maybe there's conversations around, hey, what would it look like for, an early gift instead of waiting 30 years, till the will's read. And I don't know how you pose that in a really loving, kind way without sounding morbid, but you can't take it with you. And so maybe there's some motivated parents with kids at home who are ready to, I say kids, like 30-year-old kids who are working from home.
I love it.
It's a conversation worth having. The last one is, will the market crash? My panel of esteemed experts, are we going to crash?
No.
Yeah, we just
I
talked
like
about.
the answer.
No.
Yeah, I mean, there's so many factors that seem to be trending towards against that balanced market. That would be my answer.
Yeah.
Yeah.
Here's the thing. I think to dwell on that question is, I mean, I think if someone were to ask me, I would have a firm answer like, I don't see it. Nor do any of the prognosticators in the economic sectors. No one's saying we're going to crash. The one argument is we've got a tremendous amount of mortgage debt. But if you remember the chart, there was a ridiculous amount of equity built around that debt. And mortgage debt is one of the few forms of debt that actually pays off because you're able to deduct that in most cases from your taxes. So there's an advantage in that debt. That's positive debt versus consumable debt, which is, non-appreciating assets or perceived assets like a car or credit card debt. Those things don't really lead to wealth building, where leverage and mortgage debt really is a smart play that most people who are high income achievers deploy. So what's your goal? Back to, I think Mark started with that. What lifestyle are you after? What experience do you want while on earth? And then what does the economics look like to support that lifestyle? And I think that's the conversation to have, and then bring data to support why it's a smart idea if their heart says do it.
Yeah.
I think I
And I
think
think
we're
that's the
over.
conversations we'll be having in our
Yeah,
market series.
we're
Yeah.
about 5 minutes over.
Yeah. Any closing thoughts before we depart then? Hopefully this was an inspired conversation. And maybe one of the things you can take back to your database is to go, hey, are any of these areas of concern to you? Like, how do you open up that box? Because sometimes people don't know the right questions to ask. And so my advice today is have as many conversations as you can which to Allie's point, she said a minute ago, lead generation solves everything. So, don't assume anything, hit it head on and go, hey, some of the media has thrown this at us. What do you think? And then based on that response, you might be able to fill a void or an opportunity. So thanks for spending time with us. It's your industry update for the week. Thanks,
Thank
Allie. Thanks, Manny.
you. Of
Thank you,
course.
Mark. I love the teamwork. Have an awesome week.
All right,
Bye.
Oscar.
Bye.